Justin, we're back again. I'm sure that's no one's as excited as us. So, what's going on with your portfolio? You actually made some incredible trades, which is a very rare occurrence, and I will give you your golf clap. I mean, he pretty much sold all our favorite names at the highs, like at the beginning of last week. I mean, it was damn impressive. So I congratulate you on that. And since you are an absolute genius, what are you doing now, and what are you planning to do for the rest of the week?
Thank you, Josh. Yeah, don't let me fool you. So, kind of the big news last week was what was going on with Bobby. So, a bit of a run, and especially into market close for that, and then some very strange action, or very strange, right? Interesting action after I was on that front. So, where I'm at right now is I've got some SPY puts, maybe about, it's less than 10% allocation to seeing the market going down, but the SPY puts are how I'm doing that, or at least how I'm managing my downside risk on that front. I wrote some Bobby covered calls on Friday, pretty much at the close of market. I think 15 was the strike price. It was a weekly, and so we'll see where that goes. I guess really the big thing for next week, at least as far as Bobby goes, is seeing what's going to happen, because if the market makers, or I should say, if the option market makers can't get it slammed back down, sooner or later, they're going to have to do some pretty serious hedging. And of course, if, as PyFi noted earlier, if you have all these people who just kept buying up, calls when they were dirt cheap, well, guess what? It just is going to create, this positive upward momentum. So we'll see where that goes. But that being said, my suspicion is you would see a revenge of the.
What are your current positions on GME, BBY, and Rev? And what did you sell?
So I think I sold 15 contracts at 15. Is the strike that I did for that one, and then I still have my 80s. I have a bunch of 80s that I'm still sitting on. I did.
You sold a good chunk, right? Or what did you sell? A lot of Rev or GME?
No. I closed out virtually all of my Bobby options that were going to expire on the 19th.
For a massive gain too. I mean, you were deep too. Like, I mean, you sold it at about the high of IV. I mean, that was very impressive on your end.
Yeah, on a Friday, what was going on is I was driving up to see my folks in Colorado, and I was at this do-it-yourself car wash in the small mountain town, trying to do trades and also feed quarters into the machine, to keep the car clean. Anyways, such is life. So that's kind of what I was on that front. If Bobby slips back down, I probably would re-enter some of my positions, but I kind of want to see what's going to happen. I'd also would probably.
Right now I'm just looking at BBBY's option chain, and people are still just pumping money into these calls, like a ridiculous amount. I'm seeing like for the option breakdown, it looks like we're up like 30% on just about every single contract in the past few days. I mean, that is ridiculous.
Yeah. And like I said, if they can't get it under control, I want to say that is if they can't get the price slammed back down, then very interested to see what's going to happen on that front. But big picture, the way I kind of view it is that I still have a bunch of 80 calls for Bobby, which is how I manage or at least that's how I like to think I manage my upside potential. So I guess the technical term is, I'm not going to go there because trading is not my specialty. $80 calls is kind of how I protect myself if the price suddenly runs away or whatever, right? But I definitely wanted to lock in some gains, wanted to raise some liquidity. Very curious to see if we see in-the-money puts coming in for GME or some other modus operandi to send GME down for this coming week. If so, again, from hanging on a PyFi stream, that seems to suggest that OPEX might be coming up in a good way. I know that is the case, and you see it go down. That is, you see GME getting shorted back down. Again, I think PyFi always talks about the mid-30s as a potential price target for that. Then I would probably start backing up the truck in terms of buying call options. I would probably target the December, or actually probably target the January contract. I'm sick and tired of buying options with not enough theta on it, and I'd rather have fewer options with more theta. As I've said before, never before have I ever said, gee, I think I have too much theta on this contract. So anyways, I'm not making that mistake again. I do have a small position on GME puts. I mean, we'll see what happens on that. If we don't see any price action this week, I probably will close those out, and probably for the SPY. If the SPY continues to go up, especially towards the end of the week, I probably will just cut my losses. Again, following in PyFi's footsteps on that one. And lastly, for Revlon, I have some $9 calls, but a bunch of 35s. If Revlon continues to sink down, then I will probably start backing up the truck. PyFi on his members-only stream today mentioned, and also in the streams before, his affinity for the $35 calls for January 2023, so that's probably what I'll be buying a lot of. If GME does do an OPEX run, T1, T2 of what is it? Was the 23rd, the 24th, whatever is the Monday and the Tuesday of not this week but the following week, then I would probably seek to get out of my 237.50 calls. So those are the old 950 calls for January 2023. And then I would anticipate, GME going back down, and then I'd probably reposition into whatever the January 2024 calls are, because I still want the long-term exposure. But even though I still feel we've got plenty of time right now for the 2023 June contract, if there's an exit opportunity,
January.
January. If there's an exit opportunity for that, I probably would take it, and then I don't know if the terms roll, but I would sell off at a profit, wait for IP to crush, and wait for the price to come back down, and then re-enter. But I still want that long-term exposure.
Yeah, I mean, I've been so inactive in the markets. I probably looked at my portfolio 2 times total this entire week because I've just been slammed busy with this new business that I've started. But what I did do is I sold a bit of Revlon, a bit of BBBY. Pretty sure I did nothing with GME. I still have quite a bit of contracts there. I don't have a lot of cash on the sidelines right now because I'm just hemorrhaging through cash as much as possible because I think there's a bigger opportunity for me with this current business that I've started. And I think I can get a better ROI than trading unsuccessfully like I have been doing for a while now. So I'm probably just going to be following Justin's coattails, which is a terrible sign, but I do trust his judgment, which I probably should not.
Yeah.
So I've bbeen more looking at some of the more macro trends, but barely. I mean, like when I have time, if I go for a jog, I'll listen to some podcast or something like that and try and I can't even think of the word right now. I'm so out of it.
Just a heads up. Did you catch the one? There's an excellent one with a DDMB and Rickards.
Oh, really?
Excellent. Yeah, I'll put a link. Yeah, put a link there. It's a good hour and a half long interview. So really, really good thing. I love it when they talk about.
Yeah, I still have a decent Revlon position, a decent BBBY position, a decent GME position. I did like to see BBBY picking it back up towards the end of the week, which I was kind of surprised about. There could be some decent hedging going on Monday. This is where you really have to get tricky because what's going to happen since we still have so many options very far out of the money? What's going to happen to the option chain? What if we see a run to say $15 to $20 on Monday or Tuesday? How do you manage that position? Let's say for someone like myself right now, I have a relatively small position in BBBY. So how do you actually manage that, and when do you take profits? Because if you want to capture as much gain as humanly possible, do you set up stop losses? Do you set up limit orders for every IV spike? Do you just sell market orders after every breakout? It is very difficult to manage a extremely winning position, because what happens if we go to $15 to $20 on Monday or Tuesday, but then the following week we go to $50, $100 because there's this massive squeeze potential? So this is something that everyone should be thinking about. How are you going to manage these positions to not only not lose money, which is almost more important, but also capture the greatest gain possible for a stock like BBBY that could run so drastically because they have so many out of the money options? It really depends on what people do, if they start to sell, if IV's just going through the roof, or if they just hold them and actually buy more. So that is something that I will be thinking about, and the way that I'll probably set it up is through a variety of stops at different strikes, or more so IVs. Let's say GME does start, or BBBY starts to run out of control, and we're at $20 and the options are 200% in the money. At that point, maybe you cut it to where you'll take 100% profit, because you still want that massive profit, but you want to give yourself some leeway in case that 200% profit becomes a 500% profit. Because for me personally, the way that I've made all the money in the markets is through a very small portion of stocks that have just ran massively. I've had 4 or 5 stocks that took my portfolio and doubled it, just because that's kind of the way that my trading strategy is. I don't like going for a 20% gain. I want to go for a 2,000% gain, but only get it, say, once a year. That's just the way my trading strategy is. You kind of have to develop your own. I'd rather have low probability, extremely high asymmetric plays. So Justin, how personally but you are someone who has such a big position and you have so much capital into these things where you can just kind of sell at every IV play, but you still have so much ridiculous GME or BBBY calls to where you can maintain that exposure.
Yeah, and actually, Josh, just a quick follow-up question for yourself. Do you still have any of the 80 calls for Bobby, or are you
I don't
completely
think
out
I
of
ever
your?
had any 80 Bobby
Really?
calls. Yeah, I
Okay.
never played the IV spike on that. I was more
Yeah.
slightly out of the money and just playing more just for the run up.
Okay, gotcha. Yeah, no, like my problem is like, Josh, I remember you were telling me the story. Like one of the first trades you made, you kind of goofed, but like it worked out very much in your favor or whatever,
Well,
right?
that's a bad word. I was right about everything, but my position size was so off. I put like
Mm.
40% of my portfolio into the stock that I couldn't even sleep at night because I was way over allocated. It was all well, I basically got a bunch of stimulus checks from the government and and I collected unemployment to where I had like $7,000. And I was like, so I dumped it all in the market the second I turned 18. And then I put like 40% of that into this one stock, OCGN, which was a COVID vaccine company. And I mean, they were so sketchy. They were based out of India. I mean, I knew everything about the company possible. They turned out to be a complete scam, but they got like a good news that came out one day and it went from $2 to $20 in 3 days. And it took my portfolio from like $6,000 to like $30,000 in that 3 days. But the lesson that I learned is I was so over allocated because I couldn't sleep at night because I couldn't do anything. So I would never put 40% of my portfolio into a stock that was super speculative. I mean, there's the only reason why that went up is because it got gamma squeezed. And that was when all the meme stocks were running. I mean, it was just pure luck because people were shorting the stock because it was a shitty company that should have went bankrupt.
Gotcha. Yeah, no. So I didn't necessarily have a version of that, but like when I first started to get serious about playing it, remember my June and April position for like what was it, 510 and 680s, I think it was. Remember that?
Oh
Do
my
you remember
God.
how underwater I was?
I was actually like if I was a religious man, I would have been praying for Justin because I mean, what
Yeah.
you were down like a quarter.
Yeah. Oh yeah.
And you ended up like basically we saw this huge run up, but it wasn't when we thought it would run up. It was just a random run up where you
Yeah.
sold it like flat.
It was the delayed one from Feb or whatever. People remember the March OPEX. And like the thing is, because I was diligent, there was only like a very narrow window where I could exit the position, and I was fortunate where I got in it. But kind of the lesson I learned from that is like it's one thing if you make a mistake and you get burned, because at least that the pain helps you remember. But it's quite another thing if you make a mistake and you don't get burned. Excuse me, because you have to. It's more onus on you to do that. So. Again, what I've been trying to do is honestly, like, just pay more attention to Pi-Fi, because like that dude seems to know what he's doing. And so trying to like, manage position, manage risk, manage downside, have multiple bullets to shoot at the thing, etc., things like that. So I can't remember. What was the original question we were talking about? Like
just
managing the
our
position?
positions. Oh, and so
Yeah.
I was just probing the question at people. What are you going to do if these stocks start to run? Because it is much more difficult to manage a winning position, especially if you have options, than a losing position. Because everyone's trading until the stock goes against them. Then everyone's a long-term investor. Because like, I mean, if you should have like a strategy when you're entering these things.
Yeah. Okay, dokie. Let's see. So that takes care of that one.
Rockets. I sold 750 calls on Dbui a week ago when IV was around 176, August 19th expiration. I am sorry for your anus. That hurts.
Yeah. Although hold on a second, Josh, there might be like if you see a slam come on Monday, from the Revenge of the Market Makers, you might have a potential exit opportunity. I don't know if it's going to be good, but it might be. If it's not good, it might be the least worst opportunity. But I would watch it like a hawk. Watch it like a hawk.
And sometimes, I mean, if a stock goes against you, you also need to have a strategy for how to exit it. I mean, that's a problem that I've had a lot is like,
I just don't log on. Just don't log on to your brokerage. Problem solved. You don't even see it. Yeah, go for that.
Like, how do you manage a losing position too, especially if you're dealing with options that can go against you so fast? I mean, it's tough. It's tough. And like our nieces have been hurt many times, which is why you should not be trying to get rich trading stocks because you're not going to. You don't have an edge. Like there's a very low chance that you are going to get extremely rich trading stocks. People that get very rich are usually running a business, or they're like in the hedge fund world where they're collecting fees on all the money that they're managing. And I mean, like, I do think there's an arbitrage play with GME, and there's a very high chance that something happens here. But you don't put all your eggs in one basket. So I put 95% of my mental bandwidth to trying to run business. And then you'll have a ton of capital to where you can throw at these stocks to where you can collect massive returns, like these asymmetric things that we still think are going on. But you need the cash flow first, because if you're dumping like all the money that you have into this stuff, your mental clarity won't be there, because that is kind of why I was so stressed back in the day when I put 40% of my portfolio into one stock, because I'm like, holy shit, like I'm not going to have any money if this goes bust. And it was already down like 30-40%. And I was having a hard time sleeping. But then, I mean, it was up fucking 1,000% overnight, which was just pure luck on my behalf.
Yep, and I think you hit the point I wanted to make too, is that if you have excess capital, that way it becomes your gambling money. So like even if you're down a quarter, it's like, I mean, it's not fun, but
shit. I'm broke.
Here, Josh. Oh, here you sir. Let's see. At some point, here we go. There was a clear decline in option volume on Bobby from the 8th to the 11th, and then it went through the roof on the 12th. This can't be retail. Retail doesn't have unlimited money. Yeah. Good point. Like the thing is, like, retail doesn't have unlimited money, but like when retail gets a burr up its ass, it does have some money. Now, the kind of the vibe that the framework I used to think about that is, I think retail was slowly buying this stuff up when Bobby was really cheap. I mean, like, Josh, how long was Bobby underwater? Or I mean, how long was Bobby under?
I mean, a long time.
Yeah, and that's what I was doing. Maybe like every week or so, I just I'll buy some more $5 calls or whatever.
They were so cheap. They were just so cheap.
Yeah, and so I think that's where retail comes in. Now, to your point, where you have that spike, okay, that's probably institutional, or maybe a few well-heeled retail players, FOMOing in. But yeah, interesting. Oh, and the last thing too is PiFi notes that the way they did the shorting on Bobby, it was very vulgar in the sense it was very direct. You just this huge put wall that was put in, and whether or not that was done for like a corporate action or to get them to spin off Baby or whatever, Lord only knows. But in any event, if retail, or if there was this much buzz in retail, surely the institutional players must have had their eye on it too. But yeah,
at some point they will run out of steam, which like August 8th.
Yeah.
Yeah, I mean, retail will always run out of steam, and they are always the people who kind of paper hand out first. But that's kind of like they're the ones to paper hand, but also diamond hand. Like there's a small portion that sell very quick, and the small portion that hold forever. And you ideally want to be somewhere in the middle.
Yeah,
is DRS kind of like a bank run? Possibly, but it would have to be like let's say a bank run. It would take 3% of depositors to withhold their money. I mean, instead of 3, it would have to be like 80%. I mean, like a ridiculous amount.
Yeah, and like, so here's the other thing on that. Like, if people thinking that just DRSing will be like the immediate thing that will force the shorts to capitulate, like I don't think that's the correct way to think about it.
What if DRS gets to 100% of the float?
Probably that is PiFi nuts. It would just release more shares directly into into the marketplace. So there'd be an ATM share offering. That'd be my assumption. But that's not to say that DRS doesn't have a role and that DRS isn't important. I do think it's important. It's just like reverse repo or whatever, right? I do think it's an important metric of what's going on, but I think it's like a secondary metric. It's not. I don't think it's going to be a primary thing. At least that's my guess for that front. So, but I mean, like, if people want to DRS, as a credit for DRS, I can't think of a better way if you wanted to manage counterparty risk than to hold those shares. And that, I mean, and truth be told, I keep a small amount of my shares from GME DRS myself, specifically for that reason. A small port, but yeah, I mean, there's some logic to it.
Is AMC getting diluted? I have no clue. I don't think Justin does either.
Yeah, like, why would people even be bothering with that? Oh, whatever.
Any energy market predictions for this fall? I personally do not have an edge there, but I think the person who has one of the largest edges are Townsend with Macro Voices, which is one of the most pristine podcasts in the macro world. He is very bullish on energy. That is the only market that he trades, just because there is a very low production being done, and just about every single commodity right now, all governments are pushing away from these dirty energies, and we are not producing to the same degree that we used to, but we are going to continue to consume the same amount. Therefore, we're going to have less energy, which would probably mean prices are going to go up, but I'm not trading around that. If we do see oil get below, I don't know, $60, $50 a barrel, I will buy a significant amount. I had a ton of oil back when it was around like 20 to 30, and I ran it up to like $80 a barrel, but then I ended up selling.
Yeah, Josh. One other thing on that front too is like, so this isn't really a economic position, but rather it's geopolitical. Like, energy is one of the key things, if not the key thing, of like, or no,
Right.
yeah, like, but it's also like, as far as geopolitics go, like it's almost like the lifeblood of the, Manarino talks about oil being the lifeblood of the New World Order. You could say that energy is the lifeblood of the geopolitical system. And what's going on right now is, I note that Germany and Western Europe, particularly Germany, they're depleting their gas reserves right now because apparently Russia keeps seeming to have some sort of technical difficulty turning back on Nord Stream 1. Who could have seen that coming? But the point is that if you have the German economy, which is exporting more than 40% of their GDP, and their economy needs natural gas to run, and also if you need natural gas to heat the homes, and if you're depleting your reserves, and if you don't have LNG terminals online, and if the pipelines and the companies that supply gas, I'm looking at you, Gazprom, are controlled by a potentially hostile actor, that doesn't seem to bode very well for the cold European winter. You can draw your own conclusions from that, but I suspect that geopolitically, you have been seeing, you are seeing, and you will continue to see energy being used as a weapon. So, economically, draw your own conclusions, but geopolitically, I do think that energy is one of the main ways that countries are projecting geopolitical force against each other, and you will see reverberations in the marketplace as a result of that.
Do you believe I may get a chance to buy GME sub 33 at any time soon? I do believe that you may get a chance to buy GME sub 33, but that's not saying anything because you could also.
Oh, yeah. Yeah, sorry, Josh, yeah.
No, I was just saying, like, yes, I believe that you may get a chance, as your question suggests, because I have absolutely no clue, and you can get a chance to do just about anything.
Yeah, so Pi notes that, like, if we do see them short into OPEX, you might see it go to the mid 30s. I don't know if we'll get to 33 or not, but maybe what you would say is, I mean, of course, you do your own thing, but if I was in that position, like, I'm looking to acquire, if I see GME go down, I'd probably start DCAing into GME. I'll probably use calls this time around because I want to hedge myself or cover myself for potential OPEX upside, but then I'd probably exit the position pretty quickly next week once we either have confirmed an OPEX run or if it's a mid OPEX or an OPEX.
Mark Cahotis thinks Tiger Cubs gamma squeezed GME in January 2021. We also saw Big Huang Archigos go down not long after. I heard he was long on Melvin Shorts through multiple primes, owning 70% of Viacom while leveraged to his tits.
I did hear the Viacom rumor. Where did I hear that from?
Probably Super Skunk.
Yeah.
So I don't know if there's a question there, but that is a fair point. I have no clue what is going on now.
Oh, so pull up. Here's this one. What happens if brokers go bust? So, DC, here's what I think would happen or whatever, right? Like, when you look at shares in your account, what you really have is you have an IOU from that. And so if you have an IOU, the question is, okay, well, who actually holds the share? And I think the correct terminology is, but don't hold me to this, as a locate. So from your perspective, your locate is held by your broker. Let's say you're, Robinhood or whatever, right? Robinhood, on the other hand, has an IOU from, let's say, their prime, which is, I think, Apex Clearing or whatever. Let's just say the prime is Apex, whatever, right? So Robinhood's locate comes from Apex, and then Apex, let's say, maybe they get their locate from, the DTC or from Seed & Co itself or whatever. Just hypothetically, that might be one way to do it. Or they're getting their locate from the sale at another brokerage or whatever, right? So really the question is that who's, the way I envision it, probably incorrectly, but I'm doing my best there, is who's actually holding the locate. So to answer your question, if your brokerage goes bust, that basically means that the shares in your account, the IOU shares in your account, your broker, if it was short, and assuming it's not like a Robinhood or whatever, right? Assuming like they were actually not like, or what's the other one, like an eToro or whatever, right?
I think you're complicating this. It's just what happens if your brokerage goes bust. I mean, like, you have an IOU. I mean, like, if your brokerage goes bust, it's the same if your bank goes bust. Like, you are owed your shares or you are owed your dollars. If they go bust, then if you have over 250, then you're fucked. But there'll probably be a bailout, because that's kind of all we do. Or they could get bought by someone for cheaper, and then your assets would be the liability of a different brokerage if they got taken over.
Yeah, but see, at the time too, it's like, so if you have an asset and it's the broker's liability, and that means the broker's basically going short, because that's where they would go bust or whatever, right? They say that they give more IOUs.
Not necessarily. I mean, they could go bust if they run out of capital for a variety of reasons.
Like, operationally go bust? Well, I guess if they could be mismanaged enough, but like
if they go bust through shorting, then I think there'd be a lot bigger issue on hand. Like, It wouldn't just be one brokerage going bust in that circumstance, I don't think.
Oh, okay. Yeah. So here's what I would say then in that case. I would see two. I would envision two things happening. Number one, there's a shotgun marriage to merge them into another brokerage, kind of like what happened with Washington Mutual and Chase back in the day. The other thing that might happen is you might just simply have, the clearing firm that stands behind the brokerage. So basically, the broker's prime dealer, assuming they're not, assuming they're not self-clearing, come in and basically just bail out. Again, just a shot in the dark. Oh, and one other thing. The reason the prime would step in and do that isn't because they're good people. They're trying to help you. It's because they don't want a market. They want to. They need to contain the systemic risk, and they're the last ones to do it because it goes beyond them. Then that's even more scary than them stepping up and eating the loss. It's like what happened with that ETH leak or whatever, right? Where that not a prime, but like the version in crypto basically just ate the loss because they didn't want confidence to fall out from underneath the market.
Yeah, because then they would take a massive hit if confidence gets blown out in any fraction of the market. That's going to trickle to their fraction. So they would rather just eat the loss then. Have you guys looked into BBBIG? Absolutely not. Justin, have you? I mean, like, no. You can't focus on 100 different things at once. I mean, it's difficult as it is. Thoughts on the GME and OPEX? Are the cycles no longer reliable? If this one does not play out, I will stop playing them until there's new data, because they have not played out to like the extent that I thought they would. Therefore, I've been completely wrong. So I'm going to play this one as a last hope. And if nothing happens here, I will completely stop playing the cycles until there's new data that I can conclude from.
So I would take this slightly differently. I think the cycles are reliable. The catch is that, like, in order to stay reliable, you have to. Here's the person who can say yes or no to that. Someone who's been, like, for 20 or 30 years sitting at some compliance desk at one of these big guys, whatever, right, that actually knows the ins and outs of the market. Because remember, like, every time something comes up and we don't understand it, like, we can see it in hindsight. Oh, well, there was a holiday. And because of, FINRA rule 18643, and because it was the third phase of a full moon, blah, blah, or whatever, right? So in hindsight, we can see the rules. So my answer to that is that if you had, like, 99.9% working knowledge of the plumbing of how FINRA and settlement and all this other stuff worked, you could probably see it very reliably of what's going on. But from our perspective, because we don't, there's always this ambiguity. Even though we can identify that we don't know this, it doesn't necessarily mean we can, like, confidently project forward. I think the way to play, this is what I've learned in pairing that risk, is you enter right before, once you get as much confirmation as you possibly can get, you go through the OPEX window with exposure, and if it has happened, great. If it doesn't happen, you close out your positions. Hopefully you didn't have a lot of theta burn, and you move on and wait for the next one.
Yeah.
So.
But that's not the way it's been playing out. I mean, we've gotten crushed the past few times, and I'm much more on Jay's side, where if they're no longer reliable, I'm not going to play them.
But define reliable. See, this is the thing.
So there's a time horizon. I am playing the OPEX cycle, assuming that after OPEX, you have the T+2 window to where there should be forced coveraging. If that coveraging is not done in that time frame, my theory as to what I thought was going to happen was wrong. And until there's more concrete data to kind of support these cycles and I can get more back testing, then I'm just not going to play them. I would probably take a different approach of just buying GME, because if I start to get a lot of cash flow from this business, I would just put a portion of that to start buying the stock outright, and then I'd probably start writing coverage calls against it and doing a variety of other option strategies. Right now, I don't have the capital because I'm spending a ridiculous amount of money just pumping money into this business, because that's kind of what I need to do.
Gotcha. Okay. And of course, shares have unlimited theta, so that's cool too.
Yeah. Do you think BBBY is a setup? It seems very setup. I personally do not, just because like when an option, there's just so much option volume there, and open interest, to where it could absolutely run. Could it be set up? It absolutely could be, but my personal opinion is that it is not. Justin, you probably have a bit more insight than I.
Yeah, like the way I kind of view Bobby is, if it's a setup or not, my attitude is who cares or whatever, right? Like if you can buy them when it's dirt cheap, you take profits. And then in my case, I've got my $80 calls to cover, violent upside. And I'm also writing covered calls against the shares that I've gotten. So I guess my attitude is, like, I like to think that whatever, comes my way, I'm good. So.
Who are you in Girk's stream? Justin, who are you?
Oh, Big Diggler.
He's Big Diggler, and he has a symbol of some guy. I'm not in Girk's stream too often, or like I've never once commented. I don't really watch his streams.
Yeah. Oh, it's either Big Diggler or J Edward, or the two ones that it's there.
Big Diggler or J Edward. Justin donates a lot if he has a question, but I don't see. You don't comment? I bet, right? If you want to comment, you just make sure you reads it through that donation.
Yeah, I never like the YouTube commenting thing, and like honestly, like Pi, like I'm happy to buy him a coffee every day. So,
Josh, I'm bald. It's time for
Yes,
you to join me. Well,
that it is.
I'm getting a haircut Thursday, so I will see. Maybe I'll close my eyes and just let the lady shove the razor through my head.
Let's see.
Someone is going to buy Ryan Cohen or RH. I'm not even sure what that is. They cheap for the
Oh,
price.
no, someone's going to buy out Restoration Hardware?
I don't know.
Is that, I think RH is Restoration Hardware, right?
I have absolutely no clue. Another Josh. My dad's bald. I have a full head of hair, and I'm 32. Congrats, Josh. I will be right there with you when I'm an elder like yourself.
Yeah, there are too many Joshes in the stream. That is very much true.
Justin is not as fortunate as being the young age of 38 now, I believe.
It's 2018 is how you say it, but go on.
And he may have the full beard, but lacking on the scalp.
Yeah, as my dad says, take it off the side, put it on the top.
Not having a position in BBY, what price would you be comfortable buying for the first time?
So, like the way I typically enter a position, like especially if I think that there's going to be some run or whatever, right? I typically come in with a bang, which is probably the dumb way to do it. So this is just me speaking from what I've done in the past, and in that particular situation,
well,
like,
what Justin did in the past is he would overbid whatever they were selling him for, and just get filled like already at like a 30% loss, and just I don't care. Like he tries to pay more for stock.
well, yeah. So I've gotten a little bit better since then, but a
lot better. I've been quite proud.
Yeah, if I was trying to get into Bobby right now and I didn't have a position, I would practice patience, and I would see what happens on Monday. Because like my guess would be that I think you're going to see revenge of the market makers, and if they can slam it back down and shake out some weak hands.
That's good, Justin, because I have the opposite position.
Oh.
So that means there's a chance for something to happen.
Yeah. But what I would do is I would say, for example, draw a line in the sand, say, hey, listen, I want to, like, if you absolutely want a position in Bobby, you say, okay, well, listen, I'm going to enter 10% of my position at market open, damn the price. And then like you say, okay, listen, if it falls beneath, $10 and then $9 or whatever, right? You kind of like do something like that. But again, like this is one of those things where like, it's really a question you've got to answer yourself at figuring out, okay, well, listen, like how much of my portfolio do I want to put at risk, and to what extent, or how antsy am I to get in? And that being said too, I will note that patience is probably a virtue, and
there's always another buying opportunity.
Yeah.
I just please don't buy when Ivy is spiking. The time where you're gonna want to buy is when BBY is if it's going up, because that's your human instinct. But that's when Ivy's at its highest, and that's when the market makers are pricing options. Or if you're buying stock, it doesn't even like you're buying stock, it doesn't really matter. But options, I would be a lot more strategic. So buying for the first time, I have no clue. That is for you to decide.
Yeah.
Moas is confirmed Thursday. I'm not quite going bald. I'm saying I will think about it. Which for me, thinking about it, that thought has already left my brain, and we'll see.
I'm thinking about it is what you're trying to say, right?
I'm thinking about it. We're gonna see some money market do some damage. They have
market makers. That's my market makers.
Yeah, sorry. They have to for AMC especially. I don't even know what happened with AMC.
Yeah, like the thing with AMC is like with Aaron, like I want nothing to do with that CEO. So just I don't even. I mean, I wish all AMC stockholders the best of luck. Whatever, just. Not for me.
Oh shit. What else is going on, Justin? The questions have dried up. So what's going on with your life?
Oh well, like I said, I'm like have the fastest going. That's pretty good. I did. I was up in Colorado. My dad had surgery last week. It was fine. Small surgery, orthoscopic. So I drove up and said hi to them. Oh, and so I had 2 meals when I was up there. So whatever, right? But then I'm back on. So that was good.
Well, his fast, I mean, you've probably eaten like under 10 meals in the past to like 25 days, like realistically. Like you've probably eaten like 3 or 4 days of the last like 20 something, because you were just on like a 13, 14 day fast, like a lot of it dry fasting. And before that, you were on like an alternative 3-4 day fast. So I mean, you've been fasting just a ridiculously long time, which is pretty insane. I personally have been eating a ridiculous amount, and my gut is hurting because of it. I was just at my dad's house and I had so many cookies. I had like 13 cookies. And
But did you have any Lucky Charms is the real question.
now if there was, I would have had it. How cool is George Gaiman? He is awesome. Don't tell him I said that. I'm just kidding. Yeah, so I was in Colombia with him like 3 weekends ago, and we were partying at like just so many cool places, and he's pretty awesome. A lot more introverted in person. Like when I moved out to Arizona to work for him full time, like I mean it took a long time for him to like talk like and to open up, but now he's like a I would call him a big brother, but he's the same age as my father, so more like a cool uncle or something like that.
No. What about Gammon is he's very down to earth, straight shooter, like the classic nomad archetype from the fourth turning. So
after Chamunkas, an interview on Dbui, do you think these hedge funds take RC as a stupid person? I did not see that interview. Did you, Justin?
No, but I doubt. I suspect RH is viewed as a competent player. See, I think really what's going on here, what broke all of this in a strange way, is retail is too stupid. And when I say retail being too stupid, I mean, Josh, you might be somewhat of a microcosm of this, where you had people, from let's say high school to college, whatever, right? They got their stimmy checks in 2020, right? 2020. Is when the checks started rolling out, who basically started FOMOing into companies, and they wouldn't sell. They just stood there and took their licks because they were playing with house's money. And if you had all these algos that were set up, assuming that retail would capitulate, so retail could be fleeced, but retail never sold out. And then, the people who were short just kept like doubling down and doubling down and doubling down. It kind of put people into this weird state right now because the shorts have, let's just say, various ways. And no, it's not crime, it's compliance. In order to manage and to warehouse their short interests, they know all the tricks of the trade. They know how to, obfuscate or whatever, right? And at the same time, retail refuses to give up. Retail keeps buying in and buying in and buying in. So there's this weird ass stalemate. This is why I'm always fond of saying, this game is going to end when balance sheets are no longer able to be expanded. Like someone, remember the question about Bill Huang earlier or whatever, right? That's an example of a balance sheet refusing to be expanded anymore. They refuse, or it was a Credit Suisse would not let their balance sheet be expanded anymore by creating an asset to give Huang, more margin or whatever, right? They called it. And then, that ultimately blew like a $5 billion hole in CS's balance sheet, well, anyways.
Oh, all right. So I have a cool George Gaiman story. He's kind of like a big child, but like a super cool version. So it was in June for the past Rebel Capitalist Live in Miami. I was out to breakfast. It was probably around 11. Do you remember that dude we went to go, Tom Kimball, that we went to get?
Oh yeah.
Yeah. So I was getting breakfast with him, like a few minutes away from the hotel, and I get an emergency call from Gaiman saying, "You got to meet me at the hotel lobby now." So I'm like, fuck, what happened? I fly back. I mean, I sprint. I was sweating as it's hot in Miami. I get there, and he has this badass scooter that goes like 40 miles an hour, and he just want to play with it, and like on the streets. Like he was just like, look at how fast I can go on this thing. So we were driving this, like we'd alternate like on this 40-mile-an-hour scooter going up and down the drive, like the sidewalk where outside the hotel, and it was I was shitting my pants because I thought I was in trouble somehow.
Oh, and I'll say too, if there's another RCL in Miami, there is an Amman opening up on Miami Beach, so I am definitely keen to keep an eye on that one.
Well, yeah. As of right now, you would need to spend a lot more time at a Wendy's dumpster.
Yeah. Here's a good one. So going back, yeah. So here's the answer to this thing. As long as this stalemate remains, I think that you're going to see oddities in the system. Now, whether you see it on a regular basis, I doubt that to be the case. But like I would say it would be on a somewhat regular basis. Example, we might see, let's say, no less than 3, no more than 7 OPEX runs in a given year. Maybe they're all together, maybe they're spread out or whatever, right? That's how I think you would look at it. But this is, again, a huge hat tip to PyPhi, is that, following him, I've actually like learned how to like manage risk in this shit. You kind of learn for like, signs, you learn for confirmation, so that when you do enter a position, particularly if you're using options, so you're exposed to time decay, you can buy the contracts that make the most sense, that protect you the most from theta decay. And if there's a great, if you hit it, great. If not, okay, well, you gracefully bow out, and you maybe, let's say, keep your losses beneath 7% or whatever. So I think that's Because I don't know, you don't know, not even PiFi knows, and honestly, probably not even Ken Griffin and all of them know. I mean, they probably have more information than we do, to be able to
I
say.
know,
But
Justin. I know. It'll be the second I shave my head. But
oh, yeah, of course.
I do actually. I think the highest probability for a MOAS style event would be if the stock market has a liquidity crisis.
Oh, yeah.
Like so, let's say in like this upcoming winter,
Yeah.
let's say the economy gets super bad and stocks just start crashing. I mean, like a severe liquidity style crash and credit starts to freeze. Under that circumstance, as Justin was talking about before, balance sheets would no longer be able to expand because lenders would become tight, margin would become tight, and if you can't expand your balance sheet, you are going to have to do things for money that you otherwise thought you would have to do, and that's when collateral becomes a real issue. I mean, a real severe issue. So under that circumstance, if there is this massive short position, which we personally think there are, but there's no guarantees, I think it would be very hard to maintain that short position, even if GME was falling drastically the weeks prior.
Oh, yeah. And let me, so here's something I want to throw out there. So let me just define a short position. So when people throw the word shorts around, let me see if I can put some more clarity in it. Because here's how I think about it. A share is a share is a share. The question is, where's the locate for that share? Because every locate for a share in someone's brokerage account should be paired up with a sale somewhere else along the way, or a stock issuance, but for all intents and purposes, a sale. If you have market makers and other entities like that who are stepping in, and even if they're not doing crime, like think of like an option market maker, whatever, right? When they delta hedge, so let's say somebody buys a bunch of puts and the option market maker sells shares that they don't have, these synthetics into the marketplace, these show up on your account, but the locate is held by the option market maker, and the option market maker doesn't necessarily have to go out and buy that for reasons that could make sense from time to time. But the point is, because you have more locates than shares that have actually been sold, you have more shares that appear on the balance sheets of individuals' retail accounts that actually exist in the system. And so as long as you have this discrepancy of locates floating around in the system that have not yet been paired with a sale, regardless of the modus operandi, whether it's CNS, whether it's, deferment from market makers, or, God only knows what other tricks they have up their sleeve or whatever, right? That's what's keeping this thing going. And this is why the collateral key, or this is where collateral comes back into the equation, because in order to run this, you've got to be able to expand your balance sheet, because when you're holding these locates you don't have buys for, that's a liability for you. And so if you're going to expand your liability, you have got to expand your balance sheet. If you're expanding your balance sheet, you have to have collateral so the people who are loaning you the money think you're good for it. And again, think about reverse repo as a really good example of this. No, RRP is not going to create MOAS, just like DRS isn't going to create MOAS. But what it is, it's a very good indicator that there's smoke going on in the collateral system, where collateral is being demanded.
Yes, I agree with that. I would say it's much more important to be looking at collateral fails, though. Like actual repo fails is a much higher indicator than just a reverse repo spiking, or the yields on the short end going severely below the reverse repo rate. Stuff like that. And I do think we'll see something like that, just because leverage is leverage, and there's a lot of it. So eventually it has to dewind.
Yeah. I don't. Can they?
This was the first question. Why can't they point to computer shares that are DRS'd?
So the reason on that front, as I think understand it, is that the broker would ultimately point to Seed and Co. Is, I think, the answer to the question. So I think the locate chain would go from your account, your share is located by the broker. The broker then is located by the broker's prime or the broker's self-clearing, which is then located by NSCC, which I think is then located by Seed and Co. Seed and Co. is the street name, and then Seed and Co. locates their shares from computer shares, because those are the shares held in street name, is how I think it works. The other version of that would be the share that you have is located by buying someone else's share that's being sold into the market. So whether that's another retail selling to you, or whether that's like a option market maker generating a synthetic share or whatever, right? That I think is another way that could happen. It's hard to say. I mean, that's my guess.
All right. Well, I do not think there's any more questions. What do you have going on this week, Justin?
Oh, we're just keeping a close eye on the market. If I go to Vegas this weekend, or at least that's what I'm planning on doing. No. Well, probably not.
For what? I would love to hit up that buffet again.
Oh, the buffet. Yeah. Actually, no. Three of my frequent flyer buddies are going to be in town. So,
really?
Two will be, and three.
Who? Jeff and Ribble.
Yeah, and Blake might be there too. So. Actually, no, Blake will be there. So that's going to be,
I would go if I could get in. Like I hate Vegas with a passion. Besides that wonderful buffet. Yeah, Vegas sucks if you're not allowed to be at the tables with the guys.
well, like I said, Josh, if you ever go back to Columbia, well, back up. Remember, we just talked about locates. One of the things I've learned about back in the day when I worked for banks is that banks don't give one damn about following the rules or following the law. They do give a great deal of, how can I say this? They care very greatly about looking like they care about following the rules. And there's
Yeah,
a
but
very
I'm a
nuanced
pro.
difference. Well, yeah, but I'm just simply saying casinos care about looking like they care about following the rules. So make it easy for them to look like they're following the rules.
But I don't want to get a fake ID.
Oh, no one's saying that. No one's saying that. No one's saying that.
It would just be yes. Oh, absolutely. All nighter.
Yeah.
I think that's gonna be the best conference ever. Don't tell Gavin that I said that. But there's just so many incredible speakers, and I've become extremely close with Doug Casey. So I'm really looking forward to seeing him again. Absolutely. If anyone else is going to the New Orleans Investment Conference, let us know. We'd love to say hello. Except for Justin, he hates people. All nighter. I'm assuming that. Oh, perfect. We'll see you down there. When is that, Justin? Is it October?
Yeah, it's like from the 12th to the 15th. It's like Tuesday or Wednesday. It's like the second real week in
It's
October.
like a whole week, right?
It's like Tuesday through Saturday, but it goes all the way through Saturday.
Yeah.
So
I'm really excited for that one. Shit. All right. Well, guess we'll see you guys on the next one.
okay, Josh, everyone, until next time.
See ya.